What's up, traders? It's John Howell here, officialjohnhowell.com, and in this video, we're going to have a look at the ES, we're going to have a look at the Dow, we're going to have a look at the Nasdaq, the Russell. I think the Russell was the biggest down day, over 1% on the downside. I talked about having a red arrow the last couple of days, and the reason why we're going to have a pullback. That's exactly what happened. I'm also going to show you a bit of exactly what actually happened in the actual price action itself. So let's get into it.
Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader.
Alright traders, so let's actually get straight into this. On the ES and Dow, what do we have on the whiteboard here? It's really interesting because what actually happened here on the Dow and the ES is what happened there is, let me just grab this other white marker here. What actually happened is the market opened here, and the market opened and the market ran down all the way down through here, and then it ran up to new recent highs, meaning new highs for the last couple of days, you know what I mean? And then it broke down. It was really interesting because this here, just say that there, that line, can you see that? Here you can. Alright, cool. Alright, so you can see that line there, that line was new highs. And so you can see actually the market went up to here to new highs up here. Let me do this. So the market went up to new highs up here. That would have been a fake out, and I guarantee you so many people would have went long there, and then down we actually went in the actual market as well too. We went actually down. Now the ES right now, the ES has actually a bit of support level over. Market went like this. So there's a bit of support and resistance through here, so we have a little bit more downside to come before a support level there. At least on the short term on the hourly chart. We'll get to the chart segment and we'll talk more about that on the actual chart segment itself. So what we actually see here, guys, you see on the ES, you see the Dow, Russell, Nasdaq, they're all looking really weak, so we can actually see what's happening there. So anyway, guys, let's get straight to the charts.
Alright traders, let's get straight into the chart segment. We're looking at the S&P 500 right now on a daily chart. You can see how it had sort of like a bit over 0.5% to the downside. I wouldn't be too worried about that, as in, like, you know, it actually was only, it wasn't even a 1% down day yet. It didn't have a lot of volume behind it, especially on the S&P chart. So yeah, so a little bit of a pullback. You could see that, and as I've been saying in my last few videos, that I was expecting at least a little bit of a pullback going on through there. So maybe another down day, but we actually have a lot of support and resistance. If I bring this trend up here, this was a resistance point up here. You see it rejected off there, and now we actually got this resistance point, this little support here. We break that, and then we're likely to see some follow through. Now we look at the other markets, such as the Dow. The Dow did basically nothing as well too. You can see here that the volume wasn't really good as well too. The volume's been tapering off, and so here's the interesting thing: is like that the market's been rallying, but the volume's been tapering off. So what we've been looking at there is, we can see we had a whole bunch of areas of resistance, and where the areas of resistance, and we're at this level now. So here's the thing that I'm just saying on the Dow charts. If we do get a break up, and we do get a good spike in volume, then that should mean a bit more follow through. Now if we get a break down and we get a spike in volume, then we're likely to follow through in that direction for a short term. Okay, so you can see here the correlation between this move up here and this move up here, and you can see here, right, you can see how the market overall, and let me bring my trendline drawing tools up. You can see overall that get off there we go. Alright, so you can see how this market ran up through here, but the volume went down. As soon as we started getting some volume spikes on some down bars, especially this bar here got a big volume spike. Look what happened. We got a follow through. And then what happened is, and then you can see here that we started getting some volume spikes around here. The volume started picking up as well too. And then we started spiking up as we started the rally. This volume's been tapering off. And so you can see that's what's been happening through there. So So yeah, you can see that. So that's what I'm seeing on the Dow Jones as well too. We're not at the woodworks yet. I do still believe we're likely to get we're likely to get more of a pullback, because the market looks like it's trying to top out right now as we speak. Now the Russell was down the most. This was down 1.4%, and as you can see, a big down bar, and you can see here that it's continued to make these low peaks, and I bring my trend line up. You can see here what's been happening. It's being rejected, totally rejected at this resistance level here. This is a long-term weekly resistance level, and we had a down bar through there. So I'm expecting more down movement, especially on the Russell and the Nasdaq. The Nasdaq was interesting. It actually opened, ran up high, came down and closed low. And most actually stocks did that. If I bring up to the S&P and bring up say to the 30-minute chart, you can actually see what actually happened. The market gapped open. It ran down, it came there, it popped back up to newer recent highs, not all-time new highs, but newer highs over the last couple of days, and then the sell-off started to happen. You can see here big sort of double top action through here, coming down through there. We still haven't got down through here yet, so I'm expecting at least a little bit more downside on the short term to that level through there, and that's what I'm expecting on that. So that's what I do see on the charts there, guys. One thing that I really did notice that was very interesting, if I take all my trend lines off here and bring up the SPY. Now this is the ETF, and this is the ETF that I like to trade. One thing I have noticed, guys, is the gaps in the market in this SPY very rarely are not filled. So you get a gap here and it was filled here. You get like a little gap here and it was filled here. There's not many gaps here, not many gaps here. There was a gap here and it was filled there. There was a gap there and it was filled there. There was a little gap there. Or there's a little gap there. Actually, no, it's basically no. That's not a gap there. So there's a little gap there, but that was basically filled this day here. So as you can see, right. So we have this big gap through here that hasn't been filled yet. So it's very interesting, especially if I bring up the weekly chart. You can see here on the weekly chart, especially on the weekly chart, you can see that I'm going back over the charts and I'm trying to find a gap in the market that hasn't been filled. There's a little gap there that was filled. So yeah, guys, I'm looking at the SPY. I'm looking at the gaps. I'm thinking there is no gaps. The gaps just don't. There is no gaps. The only gaps that I can see on the weekly chart was this one here, and it was filled the next week. So we actually have a gap here that doesn't normally happen in the SPY. So I'm expecting this here to come at least fill this gap, and that's what I'm going to see there. So anyway, guys, that's a little chart update for you. You can see on the overall charts and the overall movement of the market that we are starting to get a bit more follow through. Do we come down and fill that gap, or do we continue higher? We can continue higher, but right now everything's still pointing to the downside. I'm expecting a lot more downside where we are right now as well. So that's what I see on the charts.
So traders. I love doing that. You see what's on the charts, right? You can see exactly what's happening on the charts right now, and you can see that we had that run up and we had that pull back. Now, isn't it interesting on the SPY? Isn't it interesting that we actually see the actual gap there? Now, as you saw on the charts, the gap doesn't normally happen. The gap doesn't normally happen on the charts. What happens on the charts is the gap normally gets filled. Okay, especially on that weekly chart, right? So that's something very, very interesting. If you watched my yesterday's video about the actual, about the advanced decline line, isn't that interesting as well too? I talked about that yesterday. If you haven't watched that, go watch that yesterday's video. So anyway, guys, that's it for me in this video. I wanted to give you a quick market update. I wanted to show you what's actually happening here. I put up a red arrow the last couple of days saying the reason why we're not going to come down. We've done that. Are we likely to get some follow through? That's still very, to me, we're likely to close that gap. But the volume today was, this might be the average there. The volume was still like this. So we haven't got any big spikes of volume yet. So just be cautious, because the market has gone up like this where we are now, and the market just easily could turn around and blast off. And if the market does blast off, like where we are right now, the S&P and the Dow, if it does take off and we get a spike in volume, then you better believe that we're likely to race up to the highs than we were back during this year. So that's a bit of caveat for you guys that are trading the markets. Here's something to keep an eye out for. If the market does indeed hold here right now and go, and we have a big update, we have a nice update closing above the resistance, and we get a big spike in volume, that is follow through, and we're now likely to continue this regardless of what the stochastics are saying. Okay, volume is telling you a story here. We've been tapering down on the volume as this move has been going up. So that tells me one thing: we're now ready to evacuate this area. Okay, so let me actually do this for you here. I'll do this little lesson. What I'm thinking about it in this video. Let me take everything off this whiteboard now. I'll share something with you here, because I think this is really interesting, guys, to understand when you're trying to trade the markets, and this as well too. And this is something that's taken me a long time to actually figure out. There's a correlation between the markets. There's a correlation between the charts and also the markets itself, right? So you can see here, right? For the last couple of days, we've been doing this. Okay, and then we've actually just done this today. Okay, makes sense? You with me so far? Cool. But what's actually been happening to the volume? The volume has been doing this. Can you see how with this volume here, the volume has actually been going down? So the volume's been going down, but this market's been going up. Can you see little convergence, divergence, whatever you're going to call it? Can you see how that's not right? Because you look at most charts, where the volume is, that's when things start to happen. So we are getting ready right now, guys. We are getting ready right now to evacuate the area. And the next move with the next volume spike is where we're likely to go to. So here's what I am saying. If indeed, if we get an open here and a big run up through there, and we get a volume spike through there, then that's where we're likely to go for at least another couple of days to a week. Possibly, if that happens, then maybe racing back up to the highs. That is possible, okay? So right now we are in a determining moment right now of where the market's going to go. This is decision time for the market. So if it does do that, or if the market does do this, and we have another down day, and we get some big volume spikes, then guess what? That's where the market's likely to go for the next couple of days. So yes, we had I think it was that there, and then we've had this bar here. This was the weekly chart on the S&P. Yes, we do have this gap here to be filled on the S&P, and that still may happen moving forward, but right now on the charts, on the daily charts, we are in decision time. We're ready to evacuate the area, and we're ready now to move forward. So keep an eye on that. The volume is key. Look at the charts. When you have an up move through there, and you have a down move through there, if the market's going up and the volume's going down, that's telling you something's not there, okay? The market needs volume, okay? So the next move is critical. The next move is critical. If we start to get a volume spike in either direction, that's where we are likely to go. I've been a bear camp for quite some time. I still am on the bear camp until otherwise. If this market flips and goes bullish, meaning it goes, and we have another update tonight in the market, and we get a volume spike, then that to me, guys, is where the market is likely to go. I hope this makes sense, guys. I hope you've enjoyed this. Click on the like button, subscribe to my channel, leave a comment if you like this, and remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.